right? Now, let me address my question to Anil. Anil, ICRA, your current, you had, ICRA was actually estimating a higher AUM growth for the NBFCs. And in your recent outlook, you have revised the AUM growth from, say, 25% to 12 to 15%. It's still a strong growth, double-digit growth, but it's downward. And the second is that in the last 4 years, I mean, intuitively, you can see that there have been a lot of credit upgrades in many of the NBFCs. Now, does this anyway change the rating outlook in terms of some of the numbers coming out of the MFIs, especially, or some of the other lenders as well, and also in the fact that there's a credit, you yourself have downgraded credit growth, AUM growth for and lenders. So does it anyway change your perception in the whole scheme of things?
Yeah, hi. Good evening to all the participants. And you said it right. So we had revised our estimates on the AUM growth downwards after the Q1 results and maybe the guardrails which were announced by the MFIN about maybe the 4 lender criteria, that there should not be more than 4 lenders. And I think after the recent changes in the MFIN guidelines, further, let's say, tightening in terms of maybe not more than 3 lenders, and the Q2 results which show a further contraction in terms of, or let's say, the challenges on the asset quality, we believe that there will be a further downside to this growth number in the current fiscal. Today, in fact, today only we have issued our statement changing our outlook on the microfinance sector to negative, and further revising the growth number downwards to 0 to 5%. So effectively, what we are possibly looking at is no growth, given one, that the growth will come from the new borrower addition, right? So because last couple of years, the growth was coming through maybe ticket size increase and maybe more number of loans to the same borrower, which has resulted into over leveraging issues, and which are now reflected in the asset quality numbers, as you show that NPAs have gone up. So I will say the growth is going to remain muted, and maybe difficult to call out FY26, but given that there will be some kind of maybe a risk aversion to the sector, the funding itself, and apart from funding, like say funding tightness, I think maybe there'll be a relook in terms of maybe the lenders or the NBFCs when they are, let's say, pursuing growth. First thing will be to put the house in order, let's say, in terms of maybe putting up new policies, training up the collection teams, the teams at the centers, basically to identify maybe the issues which have resulted into this asset quality cycle, so that you don't get into this same maybe couple of years down the line. So some kind of maybe a further maybe you can say maybe relearning curve maybe for next maybe 12 months that the companies will go through. And yes, you are right that there were a lot of rating upgrades in last couple of years because one belief was that the borrowers which have sustained or survived the COVID, right, they are a relatively better set of borrowers, right? So that was also the belief of the lenders when they gave out the credit. But I think there was some kind of a exuberance because of which possibly even the good borrowers who actually didn't defaulted during the COVID now are facing a stress of maybe more EMIs to service, more loans to service. So which is resulting into this challenge of over leveraging. While maybe difficult to say in terms of how the trajectory will look like on the overall NBFC space, but definitely given our negative outlook on the microfinance, because see, what is happening is from the capital point of view, we still believe that capital position is fine. But what the challenge is that maybe how the funding happens, and there are a lot of covenants which are attached to their borrowings, right? In terms of NPAs, in terms of return on assets, right? And in case there are maybe breaches of these covenants, then there can be some kind of maybe a prepayment of debt requirement which can come, which means that you have to further scale down your loan book to generate that liquidity for prepayment. So things per se, if we talk about MFI sector, maybe yes, there could be some challenges in terms of maybe the ratings. Maybe there could be some downgrade action. We have downgraded one of the rating in this sector, I think last week only. So basically, it is something which we are watching out very closely, but it will not be a kind of a generalized thing, because the borrowers, right, the two criteria, which is who has a higher proportion of borrowers which have more than 4 loans. So which is the let's say, because that borrower population will become ineligible to borrow. For example, if they were servicing the loans through taking a new loan, right? So then they will get more into liquidity pressure, and asset quality will emerge. Issues will emerge faster for such companies. So let's say a company X has 20% of the AUM, which has more than 4 borrowers or more than 2 lakhs, right? Will be more vulnerable to a second entity which has, let's say, 10% of such borrowers, right? So it is not maybe a generic thing which we should draw. It will be case specific depending on the kind of portfolio one has, second, the capitalization which one has, which is the debt by equity, right? Somebody who's at 2 times debt to equity is definitely much better placed than somebody who's sitting at 4 to 5 times debt to equity.